Hey, good afternoon, everyone. Just want to make sure everyone can hear me. This is Mark from Right Line Trading, and I really appreciate you giving me your time. Now, hopefully, everybody in here is a Thinkorswim user, because what we've done, and I want to talk about this briefly before I go through the webinar, is done this. And actually, let me move into the platform a little bit, and then I'm going to I'll give you all the information. Now, I've been a Thinkorswim user for years. I have to tell you, I love the platform. I love the information that it gives me, and I really like it. The problem is, as a charting system, or as a charting tool, it doesn't have really powerful indicators. It's got a lot of standard indicators, but nothing that you're going to see here in this webinar, all of which you're going to be able to use on Thinkorswim. Now, unfortunately, I have to read the disclaimer that all signals and trading opportunities provided, both orally, written, or electronically, that are disclosed to visitors are for educational and demonstration purposes only. We take no responsibility for any losses that are incurred by visitors or subscribers within futures, forex, or stock markets. We are not certified we're not certified trading advisors. We recommend that you consult your broker. Everyone understands that the risk of losses is great. Never risk more than 2% of your account on any given trade, and just be very careful and diligent when you trade. Now, just a little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor. Now, if you have questions, just type them in, and then at the end, I'll go over. I'll answer all the questions. I'm a former professor at Jefferson College in Philadelphia. I've published close to 15 peer-reviewed articles in first-tier journals. A lot of them are still indexed by Google. In fact, they all are. You just have to put Sachs, MK, and if you put that into Google, they'll come up. I've been involved in the financial markets for over 20 years. Now, our software is a product of over a decade of analysis, and we just tweaked it today because, and I'll talk to you about that in a minute. It's really the product of over a decade of analysis of price action, market structure, and indicator algorithms. Now, it's based on mathematical modeling of closed systems using multivariable equations. And that's sort of like a mouthful, but really every financial market behaves like a closed system in physics. And there are certain forces which are brought to bear on price, which determine how price is going to move out into the future. Now, if you know what those forces are, and you can break them down mathematically, put them into a multivariable equation, then you can optimize that equation. And I'm going to show you exactly how we do it. Back when I was in school 1,000 years ago, the first time I did it was I worked with my mentor or mentors on optimizing underwater decompression schedules for the US Navy. Back in those days, underwater decompression, underwater deep dives, like over 1,000 feet. Going down is easy, but coming up is very difficult, because as outside pressure diminishes, the gas that's inside your blood begins to diffuse out. And these divers have to make periodic stops, and they also have to change gas mixtures to different inert gases, from nitrogen to argon to different mixtures. I'm not sure if argon was one of them, but I know there were a whole series of inert gases that were used for underwater decompression. And they used to do it by trial and error. And what I did was, use mathematical modeling to determine what were the best ways of doing underwater decompression are coming up. And the University of Pennsylvania has, I think, one of the world's, I think, the best underwater decompression department. I can't remember what it's called. And they have a whole series of decompression chambers where you go if you get the bends and if you get underwater decompression sickness. So they have a really big faculty that looks at that, just studies that. Now, we've made these same applications to what's called the Uni-Renko trading system. And I think if you haven't seen this in the past, you will see that it's really different than anything that you've seen before. That gives you precision, exact software-generated entries that work. And it's used by a lot of funded top step traders. Today, in 20 minutes, we were out of the market with about $400 in profit. We have one trade for 300 and change, and we had one trade for 100 and change. Our entries are great, and I want to spend a lot of time on charts, not on slides, and show you the system in real time. Now, as I mentioned, it's created via mathematical modeling. And what our software does, it predicts the future movement of price in any financial market on any time frame. Because you have to remember that if these are real forces that predict how price is going to move out into the future, it can't work on one time frame and not another time frame. It can't work on crude oil and not on NVIDIA. It can't work on one stock or not a Forex pair. If it's real, it has to work on every financial market because they're all closed systems and they are all identical. And the forces that come to bear on them to move price are all identical. Now, as I mentioned, you can use it to trade anything, futures, Forex, or stocks. And the indicators all have forward-looking ability. Nothing lags, everything leads. I mean, a lagging indicator only serves to get you into losing trades and prevent you from getting into winners. It's not only a benign thing, but it's actually a malignant thing. It serves to degrade your equity curve. So you have to avoid them. And again, the software is purposed to predict the future movement of price on anything. Now, the first thing that we need to determine is what are we going to use to describe price? There's all sorts of candle formations. Now, there also, I should rephrase that. There are all sorts of formations that can be used to describe how price moves. Now, one is a candle. One, like for instance, is an open, high, low, close. And I think everyone would agree, although not 100%, that the best way to describe price is with a candle. Now, I think a candle gives us a lot of information, and we'll go into that in a minute. But now, if we use a candle, we have to determine the best type of candle to use. Now, this is a really, really important issue because how we describe price really determines a lot about how we trade. Because what we try to see is an indication of market sentiment. Whether the bulls are in control of the market or the bears are in control of the market, whether we see a lot of chop or we hide a lot of chop. And there are all sorts of benefits and trade-offs in all the different types of candles. Now, one of them are time, and one of them are range, and one of them are tick. Now, the reason I don't personally like time or tick, now, a lot of people trade tick charts and time charts very successfully, and I don't necessarily think there's anything wrong with them. They're just not what I consider to be optimal, is because the candle is what determines the size of a candle are two things. One is how far the market moves and a unit of time. Here, it's how far the market moves and some preset tick number. So there are two independent variables that describe how each candle is created. One is how much the market moves and a given number of time or a given number of ticks. Now, range and Uni-Renko are similar. They only have one independent variable that determines when a new candle is formed, and that is simply how far the market moves. If this candle takes 10 minutes to be created, or it takes 2 seconds to be created, it's irrelevant. It's going to create that one candle based on market movement. Ticks don't matter, and time doesn't matter. So for a long time, I traded range bars because I like the way that they describe price. But lately, the market has changed. And so what I've done is I've changed from range to Uni-Renko. Now, they have a lot in common. And some of the internal calculations that our indicators do are based on range charts, even though we're trading a Uni-Renko. Because the only thing that determines when a new candle is formed is how far the market moves, nothing else. Now, this is how price is described here, and here's how price is described here. It's the same price action you saw before, and this is how it's described in Uni-Renko. Now, Uni-Renko is awesome in a trending market, and it can be a disaster in a choppy market because it hides a lot of internal movement. So you have to really have powerful indicators that allow you to sidestep the losers. Now, I just want to say this because I think this is really important. If you ask the average trader, whether you're a day trader or a swing trader, and it doesn't matter what you trade, even if you trade options, stocks, futures, or Forex, what your goal is not to get a winning trade. Your number one goal is to avoid a losing trade. Because in doing so, number one, if you don't avoid the losers, you're not going to be profitable. Everybody can get a million winners. And the 95% of day traders that have gone bankrupt over the course of the last 20 years, I guarantee you almost all of them got plenty of winners. What they pulled in were too many losers. And what too many losers do is erode your capital. And they just destroy your equity curve. So what you need to be able to do is trade with specificity. And that is take the best entries and sidestep as many losers as you can. If possible, all of the losers. Now, it's not possible, but you want to be able to sidestep of the vast majority. Now, Uni-Renko bars have weaknesses. Now, one of them is they obliterate price action. And if you're a price action trader, now pure price action traders, I can guarantee you do not make money. A lot of them may tell you they do. They may sell you a price action setup and tell you there's their secret sauce that took $100 to $100 million, but it's just not enough. Although it's still an important component in trading. And what it does is it tells you who's in control of the market, the bulls or the bears, and it's based on a number of things. Now, Japanese candlestick patterns is one of them, and I really like them. I mean, they show you engulfing patterns, dark cloud cover, piercing candle, dojis, shooting stars, all the different formations we use to give us an understanding of market sentiment. But let me tell you why Japanese candlestick patterns have lost an enormous amount of power and will continue to lose power as we move forward with trading. 10 years ago, they were really, really powerful and very important to trade. But when the Japanese rice traders created them 400 years ago, they made a supposition. And the supposition was that the power of every buyer equaled the power of every seller. And that was really the basis for their creating these patterns. And you know today that is simply oftentimes not the case. When the institutional traders come in, they're going to destroy all these Japanese candlestick patterns. They're just going to run over everything. And even the commercial traders like us, there's some commercial traders that trade a significantly large number of contracts, and they have a lot more power than we do. So although these patterns are powerful, they're just not like they were 20 years ago, and it's important if you understand that. In day trading, they're even weaker. They're still okay for swing trading, so we're giving up less than we would be giving up, and we may not be moving to Uni-Renko. If Uni-Renko were around 10 years ago, we may not have made the move. The other problem is we can't discern a rising and falling triangle channel. We can see channels. We can't look at a bear flag or bull flag pattern. The problem with all these patterns, and they're sold to you constantly as being those secret chart patterns that made Joe Blow turn $500 into $100,000 in 45 days, is that a lot of these patterns fail too often. And remember, they've been around for 20 years, and 95% of traders have still gone bankrupt. They haven't been a safety net for anybody, and they will never be a safety net for you going out into the future. If you don't look to something new, you're going to walk off that same cliff that everybody else has walked off of. Now, these are good and they're helpful, but they are so far from enough. You just need a lot more. Now I like looking at bull flag and bear flag patterns, and I look at them on Thinkorswim. I mean, it does help you. I like looking at Japanese candlestick patterns, but it's not nearly enough. What you really need are powerful leading indicators to signal an entry. And that's what the Uni-Renko system does. It filters out noise, an enormous amount of noise. And if you have the indicators that allow you to get into winning trades and sidestep losers, that's really important. Now, I'm giving a webinar tomorrow at 11 o'clock and teaching Uni-Renko candlestick patterns. And I'm thinking of writing a book, because although everyone has described Japanese candlestick patterns, Uni-Renko bars have their own unique candlestick patterns that are also very powerful. Remember, they have wicks. So trading just a Renko brick is a disaster. But Uni-Renko does create nice formations, although not as many as range or time or tick. You can definitely help get an idea of who's in control by looking at Uni-Renko bars. So along with the indicators that we've created, you really do get great entries. I'm going to show them to you. Now, the thing about Uni-Renko, almost like anything, is you have to optimize the inputs for whatever you're trading. I mean, you can't trade Amazon with the same Uni-Renko input as you might trade a small cap biotech. Yeah, we have all the settings. You just have to tell us what you want to trade. And it's really based on the volatility of the instrument that you're trading and the price. I mean, a $1,000 stock is not going to have the same Uni-Renko setting as a stock that costs $10. Now, this is an example of two full system entries. It looks real complicated, but it's not. And I'm not even going to talk about it because I want to go over the components first. Now, before I go any further, I want to tell you what we're talking about for the system. And what it is there's an API now available where your Thinkorswim platform, this system, because I don't want you to come to the end and be disappointed. I want you to know what we're talking about and what there's really no caveat, but what exactly is that we have that's really new. And that is you're going to have to trade off of NinjaTrader. You can't project these indicators directly onto Thinkorswim, but the connection allows you to take a trade off of this platform and have it execute on Thinkorswim and go right to your broker on Thinkorswim. So essentially, although you're looking at a different charting platform and a different set of indicators, you're really trading off your Thinkorswim platform. But that's the configurability we're giving you. Now, at some point in the future, we will have these available on Thinkorswim, but it's still a ways away because they're very complex and very difficult. On one chart, we may look at 9 different markets, and I'll show you that. So that's what you're going to have the ability to do. Put up NinjaTrader, execute a trade, and it'll instantaneously go to your Thinkorswim platform, take the trade, and it'll be shot to your broker. So I want you to know, I want to tell you that up front. And if that turns anyone off, I want them to know up front so that they don't feel like they're wasting their time. But if you like these indicators, there's nothing even close to anything as powerful as this on the Thinkorswim platform. And it gives you great stock entries to trade stocks or options. It gives you great futures trades, and it gives you, and I don't think you can trade Forex on Thinkorswim, but also Forex trades. But I also trade futures on Thinkorswim too. And let me quickly go over the first indicator. It's called the 3-line V2 indicator. And it looks at 3 forces that move price. The first is momentum, the second is stochastic, and the third is order flow. And it does the order flow calculation in a way that's very, very unique. And momentum and stochastic have been around forever. So you have to ask yourself, why are these now leading indicators? I mean, how do they lead price? And I'll show you. First, let's look at order flow. Now, order flow tracking, order flow analysis, a volume ladder, they're all different ways of making, of referring to what is essentially the same thing. It's looking at the market delta. It's looking at the number of traders on the bid side versus the number of traders on the ask side. Remember, you buy at the ask and you sell at the bid. You have to buy at the higher price and sell at the lower price. Now, aggressive traders may try to sell at the higher price, and aggressive buyers may try to buy the lower price. And you look at there's a whole thing with options I don't want to get into, but we're looking at we're looking at the market depth. Now, the market delta here on this candle it's a little blurry, and I'm sorry for that. It's 29.85, and that's positive. So hang on one second. Is a positive 29.85, and it's green. So that tells you that there's an overabundance of buyers on this candle. And that would lead you to believe that the candle is going to close up. Now, it doesn't tell you about executed trades. It simply is looking at market depth. And what most systems do is they track either intra-tick or intra-pip or intra-cent, if you're trading a stock, the number of buyers on the bid-ask side. And their cumulative gives you the delta. Now, here's a positive delta on a down candle. Now, and here's the problem. And this is why most order flow analysis or order flow tracking tools don't work. And that is, a positive delta does not guarantee the candle's going to close to the upside. An overabundance of buyers on the ask side of the dome doesn't necessarily mean you get an up candle. And that's a real big problem. Now, here's just a series of market deltas. And you can see that most of them that are green give you an up candle, and most of them that are red give you a down candle. But so if you create a graph like this that looks at the absolute value of the market delta, it has no predictive value as to how this is going to move out into the future. It tells you nothing. But market delta and order flow tracking is a very, very powerful tool if you can harness it correctly. And I'll show you how we do it. You don't want to trade without utilizing order flow analysis because it's such an important component of trading. You just have to do it the appropriate way. Looking at these intra-tick values doesn't have enough power. Looking at any individual candle does not either. And I'll show you how we do it. What we do is we automatically look at the delta of the two higher multiple Uni-Renko charts. Now, the Uni-Renko chart that you're trading is obviously going to depend on what you're trading. Now, you may be trading a 10 Uni-Renko if you're trading Amazon. And if you're trading a small cap, you may be trading a 2 Uni-Renko. If you're trading the NASDAQ, you're trading a 4 Uni-Renko. That's irrelevant. But it's going to look at the two higher multiple Uni-Renko charts and completely ignore your trading chart, which is extremely important. Any analysis that involves price movement on your trading chart is going to just destroy the analysis. You don't care what price is doing on your trading chart. You have to split the analysis off the trading chart and only look at the two higher time frames. So if you're trading a 2 Uni-Renko, you're going to look at a 4 and a 6. If you're trading a 6 Uni-Renko, you're going to look at a 12 and an 18 Uni-Renko. Simply, we're looking at the two higher time frames. And then what we have are two 15-period simple moving averages. And we put all the market delta values into this 15-period SMA. And it creates a slope. And what the SMA does is it filters out the outliers. Now, in the calculations that we have done, what we found is that 1 standard deviation's worth of market delta values are correct. So it's the outliers that you have to get rid of. You have to get rid of those out in the tail of that bell-shaped curve and not let them affect your analysis of who's in control of the market, bulls or bears. And we've looked at all different periods, 20 period, 7 period, 15 period, smooths it out so that the outliers don't affect the slope, only that middle standard deviation, that 1 standard deviation's worth of data, which is accurate. So when both 15 period simple moving averages are sloping up, on these two higher Uni-Renkos, I'm telling you, the bulls are firmly in control of the market. And when both of these 15-period simple moving averages are sloping down, the bears are in control. And when the 15-period SMAs are not in agreement, you get a yellow line. Now this is the way of tracking the deltas and do order flow tracking and getting rid of the data that's outlying data. And this is taken off a live chart, and I'm going to show you the charts live anyway, so it's not a big deal. But the important thing I want you to see is that when these lines both turn green, this is the order flow analysis line, and this means that both of those higher time frame SMAs are heading up. Price is going to fall, and then it's going to head up. And remember, this is not looking at price on the trading chart. It's looking at the two higher Uni-Renko time frames. And I never trade ever against order flow. And if you're going to try to call a top, and I don't do that anyway, I'm a pure trend trader, you can't at the very least do it until order flow rotates around. And you see that order flow is going to go red first, and then price is going to fall. Now here's another example. Price comes down, Now I eliminated the instrument. You don't know what market this is, and you don't know what Uni-Renko bar size this is, because it's not relevant. The only thing that's relevant is that the two higher Uni-Renko timeframes and their analysis of order flow put into this line are telling you an absolute direction to trade. If you try to counter trend trade this color, you're really going to have a big problem. And if you're getting stopped out a lot, it may be because you are trying to counter trend trade order flow. So when this falls and then rotates back up again, you have to trade long. And all these traders caught in these counter trend moves are great for us, because when the move continues up, we're going to run them over, and they're going to get stopped out. And what they're going to have to do, since they've sold their contracts, they're going to have to buy them. And as they buy their contracts, unloading the contracts they've sold, or the shares of stock they've sold, or the lots they've sold for Forex, they're going to help push the market up. So we just sit and watch these counter trend traders lose and run them over. And running them over just helps us push the market in our direction. Here's another example. Market falls and rotates up. We have yellow, don't trade. Red, only short or only down. Green, only long. Now, remember, it's important also to know when not to trade. Now, it's going to get easier and easier and easier as I move forward to define chop. When this goes to green, red, now there's no yellow here. You just don't trade. And then when the line stays green, up you go. Now, you can't tell out into the future if this line's going to stay green. But remember, we have 3 lines. So this is just line number 1. So let's look at momentum. And I want to try to move as fast as I can, because I want to get to a live chart without taking too much time. Now, we've looked at many ways of assessing momentum. You can assess it with an oscillator. Heikin-Ashi momentum we used for a long time. The best way is a MACD. Because a MACD, there's 2 events that you look at with the MACD. One is the crossover of the MACD line, of the signal line, and the other is whether it's accelerating away from the signal line or towards the signal line. And our MACD assessment does both. Now, again, we don't look at anything on our trading chart because we don't care. We want the higher time frames, and they almost always do, to determine how price is going to move on our trading chart. We look at the 2 higher multiples. Now, this shouldn't be momentum, it should be MACD. When both MACD lines are accelerating away from the signal line, our momentum assessment's green. When both MACD lines are accelerating towards the signal line, our momentum assessment is red. And when they're not in agreement, it's yellow. Now, I'll show you on the candles how we make an assessment of that crossover of the MACD line of the signal line. And now we're going to combine them. Now it's easier to take, it's tougher to get a trade, because now you need red, red, or you need green, green. But it's easier to define chop, because there are going to be times when these lines are not the same color. And when forces don't align in this closed system, price is most commonly going to chop. And you can see they go red, red first and price falls. They go green, green first and price rises. Here's the same thing. Now it's getting easier to define chop. And it's going to get easier and easier and easier. And now we need dual reds or dual greens to take a short or take a long, short, long. Now, I haven't talked about any trading entries. I've only talked about trading direction. And let me tell you, trading direction is half the battle. To know the absolute direction you have to trade is really important. And it's in the direction of all the assessments of the higher time frames. And you can't use an assessment off your trading chart. Now, it also allows you to stay in a trade. And if you trade stocks, you can ride a stock for a long way. Now, you're only going to get momentum and order flow staying green if you get institutional participation. And if they're pushing this stock up, these are not going to change. And remember, these are looking at the higher time frames. And only an institutional move like this is going to give you this kind of setup. Here's another example of chop. Then you get the dual reds, and the same thing happens here. You've got these 4 green candles in a row, and let me tell you, these are great for us because these long traders are going to go nowhere. The price is going to roll, and we're going to run them over, and it's going to help us push price to the downside. It's like candy for us. We look for these reversal candles. Now, 1 out of 9 to 1 out of 10 times, these traders will call an absolute change in direction. And this green candle will call 50 green candles in a row. But 90% of the time, the trade is going to fade and roll in the direction of these 2 lines. 10% of the time, it'll change. These colors will change. I think you want to trade in the 90% direction, and you just look for the short roll. Now, the last assessment of this indicator is stochastic. And again, we look at the 2 higher Uni-Renko timeframes. We never do an assessment off our trading chart. When the line's overbought, it's greater than 80. When the stochastic line crosses the 80 line, it stays there. Remember, this is a bounded indicator. That means the bulls are just in charge. And it doesn't matter whether the stochastic line is above the signal line or below it. If it's over 80, the bulls are in control on both higher time frames. When it's below 20, the bears are in control. And if they can drop it to below 20 and keep it below 20, they're in control of the market. Now, in between 20 and 80, the determination is based, just like the MACD, is the stochastic line above the signal line on both? It's green. Is it below on both? It's red. Are they not in agreement? It's yellow. Do we assess stochastic divergence? Yes. Do we trade it? No. Because an enormous amount of time divergence gets run over. And remember, divergence has been around for 20 years. And you know the failure rate of traders over the last 20 years, 95%. Don't trade divergence. And I'm going to show you why. Now, we've got 3, because divergence is going to call a top or a bottom. Institutional money is. Just as simple as that. A market can be oversold for the whole day, and multiple divergence signals can get run over. Don't ever trade it. It's my recommendation. Now you have 3 lines, and it gets difficult to assess because the 3 lines are changing intra-candle. So what we do to make it easier is we would project the results directly onto the candles. Now, when the candle halo is blue, right here, it means the 3 line is aligned to the upside, and I don't have to look at the 3 line. When the candle halo is gold, it means the 3 line is aligned to the downside, and I don't have to look at the 3 line. And when it's black, I know there's no alignment in either direction, and that's when we don't get an alignment of forces. So although the 3 line is here, if you're in, like we trade the NASDAQ, which is a really fast moving market, like it spits out candles like I don't know, I mean, it's like a rocket ship. If I had to look at this 3 line, I could not trade. I need to focus on price only. And this allows me to do that. Now, here's your long move. And you see how this candle is colored yellow? It's an up candle with a down 3 line. There's your roll. It's telling you, it's like a harbinger. It's telling you the market's about to roll, and it does. You're not going to trade long here. It's a counter trend trade. You get the yellow candle halo, and down you go. This is an up candle on a down candle halo. You never take that trade. and you just trade short. So you don't even care now about the 3 line. You just care about the candle halo. Now you can do it one step further, because you can eliminate the 3 line altogether just by making it transparent. Now, a lot of traders like to project it, but I don't. I don't want to see anything that I'm not going to assess. I don't want anything to distract me. I just want to be able to focus on data that is going to determine whether or not I'm going to take a trade. So I elect to make my 3 line transparent. And all I'm looking at now, with all that data, you have 3 different assessments taking place on 3 different markets each, or 2 different time frames each. That's 8 time frames, 6 time frames. And all you have to do is look at the candle halo. That's all that matters. And you're never going to trade. I'm telling you, don't take a short trade without that gold halo. Don't take a long without the blue. Now you can determine the color and the thickness. If you want to trade a black background, you may elect to make that candle halo a different color. You can. If you want to make it thicker or thinner, you can. That's all up to you. That's configurable. Now here is a short entry. Now you do have a long entry here, but we wouldn't take it. And I'll show you why a little bit later. It's a counter trend trade. Here's what we want, the short trade, but we don't have the 3 line. It works, but on the entry, it's too risky. This long trade, even though we wouldn't take it, even if we did have the 3 line, it's black. We have no entry. Here is our short trade. These are our low risk, high reward trades right here. Now here's something that I don't think hits people in the head with a hammer like it should. When you take a trade, when you take a trade, you should only take a trade that you believe has the capability. Now I recommend to scale out of a trade. I mean, if you want to trade 100 shares of a stock, I recommend taking like 33, 33, and 33. If you want to trade 3 contracts, I recommend taking 1, 1, and 1. So you only want to take a trade that has the capability of going all the way, of taking out all 3 of your targets, or all 2 of your targets, or as many targets as you want to program. So don't go for these little trades that you think can make a first target, because you're taking a full candle's worth of risk. Whatever your risk is on the trade, it's not diminished if you think maybe you can make a first target versus getting all your targets out. So the only trades you want to take are very low risk, potentially very high reward trades. And I'll show you these on a live chart. If you don't think you can make it all the way, don't even think about taking the trade, because you want the opportunity to get a full winner on every trade. Because the losers are going to come. I'll tell you that right now at this point in the webinar. Or I'd like to think it's a seminar, because no matter what you do, you'll take away information from this. Even if you get 80% winners, and I believe that you can easily, you're still going to get 20% losers. So you want to monetize those winners and give them a shot at taking out every single target. That's where you really run up your equity curve. Now, here's one indicator that we do use data from our trading chart. And it's a really novel indicator. And it involves a little bit of math I'll tell you about. I want you to understand it. I just don't want you to trade it if you elect to and not understand it. It's called an exponential oscillator. Now here's this little more of the system in action, but here's an oscillator signal long that you take. Here's a long signal that you take. Here's a long signal that you take. Here's a long signal that you take. And they're all coming off of this oscillator. Now, this oscillator has to be special, and this all goes to optimization of a system. You have to configure it based on math. Now, if you look at all these trades, which trade has the greatest potential for going through all your targets? And it's the one that comes right off the 50. And as you lift off the 50, and this is stuff we do every day in the trading room. I mean, today I talked for, we got 2 winners and out in 20 minutes. I didn't close the room for 2.5 hours because we go over so much trading methodology and trading technique and money management, which is really information that is just not really discussed. This trade, although it got your first target, has a negligible chance of making it all the way. So although it's an entry, a bona fide entry, it's one I wouldn't take. This one is one I wouldn't take. I would take this one. It's close enough to the 50, and this one is the one you're all over. But right now, I mean, that's more advanced. I just want to show you the oscillator entries. Here's the same thing to the short side. I only trade short below the 50 and long above the 50. Down, 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 down. You're going to get the counter trend oscillator signals. I don't trade counter trend. This one works. This one works. This one fails. This one fails. You're only going to trend trade. And all the shorts come below the 50 and longs above the 50. Now, I want to show you how the oscillator works and just to discuss with you 2 things. When you trade range or time or tick, price movement is arithmetic. In other words, it's a straight line. Every 2 minutes, you get a candle. 2 minutes, 2 minutes, 2 minutes. And it doesn't matter whether you get an up candle or a down candle, price is going to move whatever it moves in a fixed unit of time. The same thing, even more so with range. 10 range, 10 range, 10 range, 10 range, 10 ticks, 10 pips, 10 cents, whatever. But when you trade Uni-Renko, it doesn't move in a straight line. It moves on a curved line that curves up. It moves geometrically because a reversal candle, this reversal formation, is 25 ticks on some of our charts, yet it only takes 4 ticks to create a new candle to the downside. So that's geometric movement that gets held up here. So the only way you can have an oscillator track this is by taking the oscillator formula and raising it to the second power. So this is an algorithmic trading system, and that's why we call it our exponential oscillator. It's raised to the power of 2, and it does an amazing job of giving you the entries right on the first candle of the move. Not always, but we can take an entry on the second, just not on the third. See how this gives you the entry right on the first down candle? And right, this one, no good. But the majority track price great. Now, every time the oscillator line crosses the 50 line to the upside, get an up triangle. Every time it crosses the 50 to the downside, you get a down triangle. And every time it crosses again to the downside, down triangle, up triangle. Now I've removed these. These are oversold triangles when the oscillator is below the 20. Since I don't trade them, some people want to leave them in, but we don't get out of a trade because the market's oversold. We like it to be oversold because when it's oversold, we know that the bears are in control. Now, here's a little bit of what we call a neural net. And it's very important to take this into consideration. Trust me on this. I'm going to tell you some things I know you're all going to agree with me on. No single financial instrument, whether it's a stock, a futures market, or a Forex market, moves in isolation. they all move in relation to everything else. I mean, there's a global linkage of assets and asset classes, because what happens in the course of a day is simply the institutional traders rotating their money from asset class to asset class. So if you try to take a trade on a market, even with the 3-line and the oscillator, without looking at multiple time frames, not taking into consideration what's going on with a multitude of other financial instruments, you're going to wind up pulling in a lot of losers. Now, I'm going to give you the example on the E-mini, but I'm going to show you a couple of stocks as well. It's operational for stocks, futures, and Forex. So in other words, to evaluate a trade on the E-mini, in our little neural net, we have a little one and a big one, we have to look at the direction of the NASDAQ and the Russell. And we look at simply the trend on the 2 higher multiple Uni-Renkos. If we take a long trade on the E-mini, it's really going to be, the chance of getting a winner is enhanced markedly if you also have an uptrend on the NASDAQ and the Russell. One of the simple reasons being there's a lot of overlap in stocks. So this is our dots. Now, I'm not going to go into the color of the dots right now. It's too much information. But you can see when we got these green dots, this is the E-mini. This is telling us that the NASDAQ and the Russell are also moving long on a multi-time frame basis. So if you try, there's no way you could take these down candles because the NASDAQ and the Russell are moving up. What's the likelihood that the E-mini is going to go short when the NASDAQ and Russell are going long? It's almost zero. What you look for is the pivot long and the dot and trade in the direction of the NASDAQ and the Russell. Same thing here. NASDAQ and Russell are red heading down. These long candles, I'm telling you, are going nowhere. Now we're going to put this all together, and you're going to see the 3-line is going to be aligned to the downside in all likelihood as well. And on the short, we look to trade in the direction on the E-mini of the NASDAQ and the Russell. We look for that alignment. With this kind of specificity is where you start getting your winners up into the 80% and plus range. Here's another example. Down candles on green dots. Oscillator entry here, got the dot, up. Oscillator entry, dot, up. Now you have more help on avoiding chop. When you have no dots, the E-mini is likely to chop because the NASDAQ and the Russell have no multi-time frame trend. They're chopping. So if the NASDAQ and Russell are chopping, the E-mini is likely to chop. So you stand down. When there's no 3-line and no dots, you don't trade. And you can see how it's becoming easier and easier to avoid taking a trade in what you think is a trend, but in fact is multi-time frame chaos, really. Now, this is just another example. Now, again, no dots. Now, here's your shorts oscillator signal with a green dot. Again, up you go. Now, in order to increase the success of the dots, we expanded them to include 2 time frames, a fast and a slow. So now we have 2 sets of dots. And it's really very intuitive. Don't be, blown away by what you think is complexity, because it's really easy. Now, on the entry, you'd like a dual dot, but now you have the ability, it's a little more flexible. On a faster market, you can see that the dot is giving you a long call on the E-mini, on the NASDAQ and the Russell. So you can take this long trade. Now here's a short, here's your short. You're short on the pivot entry of no dots. Here you do, you're long. Can't counter trend trade, and here you go long. I'm going to show this on a live chart. It works really, really well for us. And I'm going to skip these. So let's put them together. Here's the 3 line and the dot on the entry short, and down you go. This is a counter trend trade. It's coming with red dots. Here, you don't have a trade because you don't have the 3 line. Sometimes it's going to happen. If you're going to be protected against lots of losers, every now and then you're going to be prevented from getting a winner. That's a mathematical axiom. So you can't take this short. Although you want to so badly, you're not going to get that short trade. But you get the biggie. And I'm just going to skip these. So I really want to go to the chart. Now finally, there's a little bit more. We have a money flow indicator. Now the money flow indicator is simply a much more complex neural net. Remember, it's simply what it's doing is it's making an assessment of it's tracking the flow of money from asset class to asset class. You may hear a lot of people say they have money flow indicators. There's no way of knowing really in which direction money is flowing. Institutions don't put up a flag and tell you, I'm going to start moving my money into stocks. I'm going to start moving my money into bonds or precious metals or currencies. You have to determine that. And this is a bigger neural net. And it's these 3 lines, which are now 5 actually. Now on the E-mini, the critical line is the center line. Now there are 9 markets here. And it's taken us so long to determine. Now the correlation coefficient has to be 0.7 or greater in terms of direction or counter trend direction. I can tell you in here is the NASDAQ, the Dow, the Russell, Treasury bonds, Treasury notes. There's an energy, there's a precious metal, and there's currencies. So we are tracking 9 asset classes and determining whether money is flowing into stocks or out of stocks, because this is the E-mini. And it works awesome. Here's our key line. If we get the upper or lower, it's icing on the cake. And it gives us an absolute direction to trade because money's flowing into the market. And when this is all screwed up, you don't get any alignment here. You've got another way to define chop. Now, here's putting it all together. We want on the entry, this middle, we call it a quant line because it quantitatively weights the markets inside it. You've got your oscillator signal, you're below the 50, you've got the 3 line, and depending on your automated trade management strategy, you can take this trade all the way down. This is 21 points. Now we would be out on a reversal and back in and down. Here's another trade. Short, you have no short trade, no dot confirmation. Long, you do have the dot confirmation and you're up. Long here, no 3 line. Long here, you've got the dots and the oscillator signal, but you're way off the 50. This would be your first target, but here's your bread and butter trade. Trade tight to the 50, and here's your full winner. This was a $3,800 60 trade that we took. Always the biggies come close to the 50 with the oscillator and the dots and the 3 line. And what you see these blacks, these are assessing divergence on the higher time frames. And you can get multiple divergent signals. Now, if it happens on the entry, we won't take it. But if it happens intra-candle, we just ignore it. Now, we could code these out, but some of the traders in the room want it. We have 160 people in the trading room. And here's another trade. There's no oscillator entry. You don't absolutely need one, but it helps. There's long. Now here's your oscillator signal short. You have no dots, and there's no counter trend trade here. And here's the full system. So there's a couple of more things I need to explain to you, and we're going to go to the full charts. I'm not going to do it right off of this. And that's our offer, and I'll show that to you later. So let's just go to the charts and not screw around here. Now I have the SPY up. I have the E-mini up. Hopefully you can see all this. And let's just take a look at crude. And you can see it's really very intuitive chart. Now there's just a couple of other things I want to talk to you about. Now, this background bias is really important because this is the multi-time frame alignment of whatever you're trading. And when it's green, it's a lot of information. I just don't want to throw out a lot of gimmicks to you, have you trade a black box system and not know what the heck you're trading. I could say, yeah, take that signal because I'm telling you to. I want you to understand what's going on when you take it. So, and a lot of people, I get criticized for giving out too much information and confusing people. But I want you to understand what's going on. Now, we have never made a multi-time frame assessment of crude oil. This is the most important assessment there is because you're most likely to get a trade when crude is aligned on multiple time frames in the direction that you want to trade it. And there's 3 powers up. This is the intermediate, this is the strongest, and this is the weakest. But your bias is always up. Here, your bias is short. Here's your weakest short. And here is your intermediate. Of course, I can never find it when I look for it. Now, on most charts, what you find, here's the intermediate down, is that if price falls, the background bias goes red. In this case, it's the opposite direction. When the 2 higher time frames link to the downside, your background color goes pink. And that's when you're desperate to get a short entry, and trade your financial instrument short. That's the key. None of this, except for the oscillator, is looking at price on your trading chart. That's why this is leading price all the way. Now, when the background is clear, I just don't ever trade. This happened to be a period of time yesterday where there were great trades. But price almost always chops, like right here, when the higher time frames don't align. And there's something called the nonlinearity of independent variables. The strongest independent variable is the alignment, multi-time frame alignment of trend on your trading chart. When you got that, everything else you use to get an entry. And the guy who I read that first from was 20 years ago by the name of Alexander Elder. And that guy wrote a book called Trading for a Living. I've actually talked to him. He sent me a signed copy of his book. He was the first person, what he proposed was called the triple screen method of trading. And he believed you needed the triple screens to align in order to ever take a trade. And he was a multi-millionaire trader, trading really off of primitive systems back then, waiting for that triple screen alignment. And that's one of the principles I based this system off of. Now, there's a couple of other things I want to show you. And then we're going to just look at the trades, how well this gets you into winners. This, remember I said this is an exponent, price moves exponentially. And I could leave this out, but this is a 50 EMA of a 50 EMA. and it moves different than any other moving average you've ever seen, and it's an awesome move. It's similar to the 50 EMA, but smoother. And the fast line is a 15 EMA of a 15 EMA. And this is all goes back to mathematical modeling. I mean, we have kicked out all the old stuff that everyone has used to lose money with. And we've recreated really a trading system. Now, the last thing I want to show you is our pivot indicator, which is a killer pivot indicator. And almost every pivot indicator I've ever seen creates pivots wrong. And this one is really, will give you a lot of problems. Via Japanese candlestick dogma, pivots are supposed to be created off of candle bodies, not wicks. Now, most pivot indicators are lazy. It's really much easier to create a pivot on a price low than a candle body low. But the candle body low is where all the buyers are sitting here. And you see when you come up, price hits, it bounces. Price hits, and it bounces. We come over here, price gets close, it bounces. And remember, a pivot is just not a discrete area. It's just not a line. It's an area where there are a ton of buyers sitting. Now, I don't know if price is ever going to come back down to it, but we do not trade into pivots. If you do, you're going to wind up racking up losers. See right here? Here's your pivot. Now, price does approach it here, comes back, approaches it here, and comes back. And it approaches it here and gets turned. And here's a potential entry. Doesn't make it. Now, a break of a pivot is a 2/3 candle body close. Most pivots would show this as broken because you just got to tick above it. But 2/3 of this candle body never made it above. That's the only thing that takes out these sellers. So this pivot continues to rock and stays. So, and the only other lines I'm going to show you, I'm going to tell you is this is the open. This is yesterday's close, and this is the volume weighted average price. It's the VWAP. Don't ever trade into that. If you don't want, if you don't want to get mega bruised. Optimally, you want to trade long above the VWAP and short below the VWAP. I had a lot of problems with the VWAP yesterday, and it cost me a pretty penny because normally it's not sitting close to price, but when it does approach price, let the trade go. And I have trades called free and clear, FAC, and those are trades that don't take place near any areas of support or resistance. So let's just take a look at crude, and then I will look at a few instruments. Now, I just want to tell you, here's the key quant, the one that directs money flow on crude. Now, we only have 3 correlative markets, not 9 on crude. But here's your entry. Free, it's a gimme entry right here. Down you go. Then you get a pivot and you just can't trade. Bang, 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 and crude price gets turned. Now we're looking for pink background to trade or dark green, but we've got this pivot and we want to trade close to the 50. Now here's your trade. You see this wick? This pullback allows us to take an entry right here. This is a valid entry on dual dots, on the 3 line, and on every single set of correlative markets we have. And what's great about this candle is I like to enter on the candle that breaks the pivot. And up you go. This is riskier, but this is a revolutions entry, an oscillator entry. Here's the 3 line, but here's a little pivot. I just don't like trading into them. So I would enter here. You get the wick. And you know why the wick was created? Because what happened was price hit and it bounced. And you almost got a turn. But bulls were just strong enough to challenge the pivot again. And it went through. That would be my entry. And there's your winner again. This is just all trading technique, but you can see how well this sets up for winners. And these are big winners. I mean, on what we do, these are $350 winners, and you're done for the day. I mean, $700 is more than we would need. And here, you don't have pink, you don't have green, and what you deal with here is a bunch of really crappy setups. I don't care what anything else shows. You wait for that multi-time frame alignment. You have nothing to trade. This big move down, you cannot trade it. There's nothing here to trade. You'd like to take this trade here, but you can't. And if you do, you'll get a winner here, but you'll pull in 4 losers the next time you try it. Here's support, down right into it, and it bounces. Now here's the VWAP. Into it, it bounces. Into it, it bounces. Into it, it bounces. I mean, talking about a canary, this is why we don't trade into it. And that's it. So these are our FAC trades, free and clear, right here, right here. This is not free and clear. And let's see if we got any in the morning. Yep, right there. And we can go a little bit earlier. See, no background, just junk. Total junk here. Look at this trade. It's a little bit early in the morning. It's 5:33 in the morning, and you are trading into a small swing pivot, in which case you can take candle 2. But you've got your key line here, and bam. Now, we're in the process of creating. We're going to be looking, and you would get the upgrade. We're going to be looking at pivots, and we're going to be able to assess the number of buyers in every pivot. Looking at, order flow, number of buyers. And what we're going to do is be able to assess every time it's hit, how many buyers get depleted. So it's going to be the first indicator of its kind where it will give you an assessment of its power. Now, if there are a ton of buyers here, you would stand off on this trade. And you'd have to wait until you got the pivot breaker here to get in. But if there are only a few buyers here, you can go into it. But you can see the setups that occur and the trending market. You don't have the 3 line when you get the pink background. But let's look at one other instrument. I will look at the SPY, the SPY-Zola. Now, if you want to trade the SPY, now I have to change the Uni-Renko setting here. Sorry. It's a great instrument to trade. I'll put up stocks if you want me to. I was going to put up the SPY and the QQQ as a proxy for stocks. Okay, here we go. Let's just go to the morning. Here's a perfect trade right here. Now here's your key line. Now, this trade is very small and might be a loser. Here's your move to the upside. Here you have no background bias. You're not going to trade. Here's your short trade, right? Nope, you don't have it. You don't have the 3 line. Here's your short trade right here. Now the risk to reward here is amazingly high. It's about 3 to 1 to 4 to 1. And here is your, now this line is green, so you have a problem. I don't know why we're getting a consistent green line here. And it's just stuck as green. Here we go. There's your short trade. Through. And here's your great long trade. Right here. You have to be careful. But there it is. And these are the kind of trades. I mean, you can trade this with an enormous number of contracts or shares, because this is got everything on it. It's got your key line. It's got your pink background. And you're not going to get that alignment that often, but you can stand down on all the other trades, and it's very unlikely to get a loser. Here's another one. Here's another one. Now, if you try to find losers, it's very difficult. Now, this is a potential trade, but I don't like that background color. I don't like blue. I want to trade green. And now here, we're just looking for a pullback, and we just don't get it. And here's our short right here. And just have to, this is just, we have pivot issues, but there's a long. This is a trade long. Okay, so I could go over this all day. Let me go over it and show you the QQQ. Now this is it. Now we're not trading any gimmicks. We aren't trading biotech breakouts. We aren't trading. We're actually day trading these instruments. I have to put in the QQQ template. Remember, the dots and everything are assessed differently. Now here's the QQQ. Now the QQQ is, the NASDAQ is choppy. And I'm just going to go to the beginning of the day. At 9:30, there's the gap and open. We just don't have anything. Listen, I'm not going to invent them for you. Here's a trade. Here's a trade. Here, there's no pullback. There's just no trade. So the Qs on a Friday are choppy. Here we get a great trade. Here's our great trade. Now you're only taking 11 cents of risk on this trade. You have to consider the risk to reward, because if you could trade 1,000 contracts and you make 28 cents. So it's almost 3 to 1. So if you're trading 1,000 contracts, for instance, you're going to make $280 on $100 of risk. And I'm looking for losers. Now, I'm not going to trade anything where there's no background. And there's just not that many trades today on the Qs. There just aren't that many. Now, the only thing I'll just share real quickly, I'll show you the NASDAQ. And then I'll see if there are any questions. Well, that's crude. Let me dump that. And let me show you the NQs. I don't know where they are. Where did my NQ go? Hang on a second here. I'll just, let me make it. It's real easy for me to make. I'm just going to change this. Now, the NASDAQ today was like a godsend. It was a killer chart. Now, let me move this to the NQ. I hope this doesn't blow up my chart. There it is. Let me put in my NQ template. Now, I hope I'm not boring everyone. Now, you can trade currencies, you can trade Forex, and you can trade any stock. Now, if I put a piece of tape over the NQ, you would not know whether it's a stock or a Forex. And how the number of entries you get is going to depend on how it trends. If it's very choppy, you just won't get any. There really weren't that many on the SPY and the QQQ today, even though they took a dive. But on the NQ, the trades were incredible, and I'll show them to you. Now, we are able to avoid chop really well, and I'll just go through this really carefully with you. Now, our dots on the NQ are superlative. If you don't get the dots, don't trade. And you must have this quant on the trade. Here was our first trade on that pullback, and that was a full winner right there. That's a trade I took live in the room. And 160 people and change take that. I was 8.5 points. Now, I took one before that. That was actually a winner. That was very risky. I was very upset I took it. And I can't remember where it was. I really honestly can't. I'm just going to go forward. It was a winner, though. Now, here's a trade. A lot of traders took this. It went 12 ticks, but it's too close to the pivot. Now, we just couldn't get this trade. Sometimes you can't get them. Now, this did not have dot confirmation. There's no trade. But then they start clocking in, I believe. Now, here you have nothing. See the dots? Just aren't there. There's your trade, right there. Now, this allows you no trade, no trade, no trade, no trade. Here you get a trade, you get a winner. Now, if you can pick apart chop better than that on any system, I give you a nickel because you just can't do it. No dots into a pivot, no trade, no trade, no trade. And here's your trade. See that pullback wick? Pivot breaker? Really nice trade. Here's another trade. First target. No 3 line here. What a shame. But winner here, winner here. Now here's a potential trade, but you've got this pivot. Now you've got 1 dot. It's enough. It's a winner. 1 dot, but no background bias. You don't have the major quant. I'm going through this. I know if it's the first time you've seen it, it's really daunting. But there is your pivot, and remember, it's an area. Don't trade down. Wait till it breaks. No entry here, so you need to pull back. And here is your trade, right here. And here's the end. So there was 1, 2, 3, 4. All of these are censored. 5. All these losers gone. This is an entry I missed right here. See the wick here? Right there. That's a valid entry. What you have to do when you have this much space to the pivot is move your stop to break even right away. If it hits and bounces, no problem. If it breaks, you're through, and that's it. There just wasn't anything else. Let me see if there's anything else. Nope. Right here. Now that's how you sidestep chop. You can do this on any stock, any instrument. You could get on any individual market 3 to 5 perfect trades, and they're very, very unlikely to fail because you have so much in your favor. The dots are superlative. If you don't have dual dots, you don't enter. If you don't have this major quant, you don't enter. If you don't have the pink background, you don't enter. So you have a lot of rules that are going to prevent you from taking trades. Occasionally, they're going to prevent you from taking winners, but they're going to prevent you from taking a million losers. I mean, a million. You can't trade the NQ without the ability to sidestep all these losers, and we have it. Look at this down candle right here at 943. Look at the color of the 3 line. It's blue. I mean, that's the kind of power that we have. You're just not going to see it. It doesn't matter what stock you trade. If the stock happens to trend, you're going to get great entries. I look at Apple a lot, and I don't know where my Apple chart is, to be quite frank with you. I don't know what platform open. I'm missing a whole bunch of charts here. And I don't know if it's a ninja problem or what. I only have 3, E-mini, NQ. I don't have an Apple template set up for you. But you're going to see, you're going to get great entries, but you're going to have lots of opportunities that are just not going to align, and they're going to allow you to stand aside. Again, the way it works is we would take Ninja, because I don't want anyone to be confused, and we have a lot of people in the room. Take Ninja Trader, we're going to hook it up to Thinkorswim, or or TD Ameritrade, whichever one you want to call it. And when you take a trade here, it's going to execute here, just like you took it on your Thinkorswim platform. Now, I'll tell you, I have an options portfolio. Last year, we were up 105%. I had over 70% winners, and I took all my signals off of this on a longer time frame. If you want a swing trade, we'll give you the Uni-Renko entries. Whatever you need, we'll tell you what the inputs are. You just have to tell us what you want to trade. So Now, I just want you to know there's one associated cost because I don't want you to have any surprises. You're going to have to get a live NinjaTrader platform if you don't have it. And the cost is $80 per month. And I'm telling you, it's really worth it because you're going to get great trades. Don't have these indicators on Thinkorswim. And you must trade with order flow and the multi-time frame assessment of stochastic and momentum. It will always keep you in the right direction on these trades. And this multi-time frame assessment of trend, I couldn't trade without. And because I'm so hyper about taking losers, I'm only going to trade the strongest up and the strongest down and look for an entry on that. If I give up winners, I don't care. And look right in here on the E-mini. Look what you've got here. Just absolute total junk because the two higher time frames are not aligned. You're going to see this on stocks, on forex, it doesn't matter. It's a universal principle. And you just don't even think about a trade. Now, these big dots we're going to alarm. This tells you there's an impending 15 cross 50. I want the 15 to be above the 50 in a long and the 15 to be below the 50 on a short. It's just the beginning of a new indicator that we're creating. The pivot, I don't know if I'm going to call it the pivot buster, but that is in transition. And the one thing that we always do is give you upgrades and add-ons. If we add stuff, we give it to you. So we always upgrade the system. And the end of the webinar is this: is that when your goal is optimization, your job is never done. No platform is ever static because the market is always changing. Market conditions change over a period of months. And as the markets change, the system has to be tweaked. Things have to be modified. You can't trade a static program that 10 years ago is the same as it is today because it doesn't work. Mathematical optimization requires consistent work and you have to consistently monitor. We do it by running 90 to 180 days of market replay data. We get the average true range or volatility. Volatility on the E-mini was terrible. Now it's better. And the last and not least is on the instrument. We're going to give you the ATM. And this is really neglected, which is the automated, I can't spell, trade management strategy based on the ATR, which is the average true range, which tells you volatility. And what that tells you is where your entry is, where your stop is, and where your first, second, and third target is. And to close and then answer our questions, everyone's always saying, I want a 2 to 1, a 3 to 1, a 4 to 1 risk to reward, and you can get that on stocks easy. On futures and forex, you cannot. But where you set your first, second, and third target is not up to you. Where you set your stop is not up to you. It's up to the market. And we base that upon the volatility of the instrument. Our first target on the E-mini is 5. Our second target is 8. And our third target is 3 points. But our target on the NASDAQ is 20 and 30, and some traders 40. So it's simply based on the average true range going back 90 to 120 days. And we give you our recommended, and we program it for you. Plus, we will set everything up for you, including your link, your TD Ameritrade account. So it will trade seamlessly for you. You just do need the live platform, and you are going to have to pay. I'd have to pay by the quarter, I think. And I think it's about $200 a quarter. I don't know the exact price, but you will need to do that, and they will execute for you. So let me just show you the offer, and then I'll answer any questions. That's normally $29.99. The special offer we're going to give it to you for $13.99, and that's a lifetime license, and we'll configure it for you on all these markets, on stocks, futures, and Forex. Even though I trade futures, even if you trade stocks or you trade Forex, you get come into the room with me for a month, and your learning curve on understanding how to take entries will be incredibly high, and you'll be trading on your own very fast. You also get a 10-module educational training session, training sessions. So you're going to get all this in video form, and you have 450 video tutorials. And if you're one of the first 5, I'll do a mentorship session with you. And I say 2 hours minimum, but I mean some of them are marathons. I want you to learn how to trade this system profitably, and I'm telling you, you can. So that's the offer, and let me pull out the questions. Okay, hang on there. It's recorded. Okay, good. Hey, an alumnus, the Benz. Do you have an idea of what extra delay will be caused? You know something, Tom? It's so minuscule because it's going from computer to computer. Now, if it was going from computer to server to computer, there'd be a delay. But all the software is inside your own computer. Like we're going to create an automated system, and that's going to go from server to your computer. So there will be a short delay, but a delay. In this, I'm telling you, it's going to be faster than you can believe because it's not going anywhere. You know, it's going about 1.5 feet. So it's really zero delay for any intents and purpose. Yeah, okay, Robert, I just want to let you know that very shortly, around December 1st, we're going to start a DAX trading room. Now, the DAX trading room will start, I believe, between 3 and 5 a.m. Eastern. So besides this room, you're going to have access to a DAX room, the European session. You know what, Jay Trader? I swear to you, I don't remember what they are. You know, you're asking me the MACD settings. I'll check them, Jay. I won't. I mean, I'm not going to hide them from you, but they're buried internally in the system, and I just don't remember what they are. They're nothing special. They're a little bit different than 12, 26, and 9, but there's nothing unique about them. I mean, people have been trying to find optimal MACD settings forever, but I don't think one is any better than any other. But I'll get them for you. I just don't know them. Yes, Pat, we will put it on recording. The stop losses, Pat, depend on what you're trading and the size of your candle. So if you're trading on crude, a 2 Uni-Renko, it's 11 ticks. If you're trading a small stock, it's going to be 11 cents. The average Forex stop is 11 pips. If you're trading a much more expensive stock or the NASDAQ, it's 25 ticks or 25 cents. We just don't trade the Forex on anything bigger than a 2 Uni-Renko. So the stop is relatively small. Randy, I wasn't going to because I don't have it hooked up, and I should have done that. And the next time I will. But I mean, I have a million TOS charts. And what I do is I trade the system right off of Ninja. Whoops, wrong thing. I mean, I don't trade it off of Thinkorswim, although I do take all of my entries, all of my swing trade stock entries, I just trade at night and put them into Thinkorswim. So I'm not going to show you any TD Ameritrade charts if I can find it. Hold on a minute here. Let me just put in think. It's right here. And I don't use any Thinkorswim indicators because I use all my own. And here's a Thinkorswim platform. I'll just open it up really briefly. I'll show it to you. But I don't have anything formatted on it because this is the platform I trade. And the swing trades that I take, I get my entries, I enter at night. All my options trades that I send out to the subscribers to my newsletter go out at night. I want it to be a service where you don't have to be sitting by your computer and you enter them in the evening. And hang on a second here. We'll wait. Now I'll keep answering questions. Okay, Joel, if it's pink, I only go short. If it's long, I only go green, regardless of anything. Because when you've got your dual longer term time frames heading up, or your dual longer term time frames heading down, you can't ever trade against that direction. If you do, you're going to get stopped out. That's why that background bias is so important. You cannot trade against it. Believe me, if you do, you're going to get killed. And I mean that in a really very kind way. I don't want you to get stopped out. And you can't trade against the multi-time frame alignment in trend to the downside or the upside. And a lot of traders do, and those are the ones that we eat for breakfast. I mean, on this chart, well, if we look at a really nice area here, and there were two great trades on the E-mini right here. I have the wrong thing here. Hold on. Right here. This was an incredible short. And this is a gimme short. This is an entry I didn't tell you about. It does a multi-time frame assessment of trend, market structure, and price action, and it trades a range. And it looks at 3 range time frames. And it's a great entry signal. It's right here. And this is about a 5-point move down on the E-mini. And then you get another one right here. Now, you know what? This one doesn't set up. Where was it? I thought we had two. Right here, this was a for maximum excursion was 5.5 points. It's a perfect trade. Now, here's my Thinkorswim. The thing is, I look at it. I like to see I teach off of it sometimes, but I don't have any complex indicators because I use my own. And that's really the reason. Like, I gave a webinar about my favorite stocks. I like Etsy. I like Amazon because of the fact that retail sales are going to be so high. And then I have my watch list here. When Amazon hit that low, I mean, we're a buyer. And here's my watch list: Salesforce.com, Corning, Home Depot, Lowe's, Microsoft, Corvo, Raytheon, and there's others. So I utilize the platform a lot, but I take my signals, my swing trade signals, and I trade them here, and I trade my day trading signals right off of Ninja. Now, your other option is to just open an account with Ninja, but the whole point of this was to give you the ability to keep your broker. And if you trade with Ninja, execute your trades on your Thinkorswim platform and not have to switch brokers. I mean, it's a seamless connection. Selwyn, if you already have it, we'll connect it for you. Don't worry about that. Oh, here's why, Ray. You have to get an extra data feed. And I should have told you that. I'll show you what it is. It's super cheap, but it's Kinetic. Kinetic allows you to trade 500 stocks. And trust me, I don't think you're going to trade anything outside of those 500. And if you look at my tools in my instrument manager, I have Tesla, I have the SPY, I have the Qs, I have NVIDIA, I have Amazon, I have Apple. I mean, these are the stocks that I like to trade. I really like the Qs and the SPY. If I get a great setup, it almost always is a winner. And here are the currencies. So in order to get those, you do need Kinetic, which is about $60 a month. And I apologize. I want to tell you about any upfront costs. But one successful trade will cover the cost of everything. It's not a lot. The key is you want to make money almost every single day. The plus signs above the price bars, this is our fast assessment of the direction of the NASDAQ and the Russell. This is our slow assessment of the direction of the NASDAQ and the Russell. This is our assessment of direction of 9 correlative markets. Some of these we want to go up when the E-mini goes down. If they do go up when the E-mini goes down, they go red. We just have them coded in the inverse direction. You can see the candle halo is yellow. This red dot is telling you that you're trading the E-mini short and the NASDAQ and the Russell are heading short. This is when you're very likely to get a winner, and the multi-time frame direction of the E-mini is short. This is called a revolutions entry. It's a smart entry. You get this entry, which assesses 3 time frames on range. I showed it to you, I think. Let me see if I can open it. Right here, it's the continuation. Now the longer period's 13. It's also looking at 8. It's looking at an 8 range and a 13 range. 2 higher time frames on range that correlate with Uni-Renko, because there's a lot of correlation. And boom, 5.5 points. Now that's the full excursion. You know, obviously you got to be super lucky to get the bottom, but that's how far the trade moved. That's all. And this is the kind of trade. Listen, nothing's a gimme, but this is as close to a gimme as you're going to get. You're real close to the 50, and you're trading right below the VWAP. And this is just a terrific trade. Now, I didn't take it because I got a full winner on the NASDAQ, and I'm just too slow. I took a trade yesterday on both markets at the same time, and they were both winners. But I'm not projecting the E-mini. I'm projecting crude, and I'm projecting the NASDAQ. So I didn't see it, but a lot of traders in the room got it. That's how I know it was there. Because afterwards we have long discussions. No, we're on NT8 now, Kevin. Totally set up, completely configurable. We have a ton of traders now on NT8. In the room, I'm probably going to eventually go to NT8 too. For both, either one, John. You can put it on 7 or 8. Either one will work fine. Well, if you hook it, Mel, if you hook it up to TD Ameritrade, you're going to use their data feed. And they provide you all the data you need for stocks and futures. So you got a data feed, you know, free of charge. You use theirs. Whatever you pay them is we're just doing the connection, and that data feed is not only going to allow you to take your trades, It's also going to drive all the instruments. That's all you need. I get CQG because I am on NinjaTrader, and I purchase Kinetic. You're not going to have to purchase Kinetic because you're going to get stocks from Thinkorswim if you hook up. No, I know says, oh, everyone always asks me about the Indian stock market, and we have to look at it. We really haven't, but we just right now we're just not. I get asked about the FTSE and I get asked about the Indian market all the time. And the thing is, we're connected to the German market. We're connected to the DAX, and we're connected to its cash equivalent. So it's just a matter of time, but we're not right now, Saz. Yes, Pat, you can. Yes, you can. Half, Bill. It's always like that. Jason, let me just answer this. Let me just look. Do you have a scan you run to find setups in all the markets you are watching? Okay, that's a great question, Jason. And what we're going to do, it's actually only one day away. We'll have it next week. I'll show you what we do. We thought of that question already. And let me find it for you. Hold on one second. I don't have it here, but hang on a second and I'll show it to you. Smart question. We're creating that now, and we're very, 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 very close. And if you come aboard when it's finished next week, you'll get it. We always give you, one of the things, you get upgrades and add-ons for life. We create a new indicator or a new system, or you get it. Not a new system, but if we create a new indicator here, upgraded indicator, and here's our trade analyzer. I'm going to change the name of it too. Let me get it over here. Here it is. It's going to signal you when the market is setting up for a winning trade. So you can watch a ton of trades from markets. You see, this is green. You see all these are green. You see these are all green. You see this thing is green. You see the 15 is green. We're going to set this up. It's going to be configured a little bit differently than this. But when you see this, you're going to get an alert right here. It's going to start to flash orange. This is when you're going to get your great trades. It's not going to signal you an entry, because what it's going to signal you as, it's going to tell you is you have a potential great setup. The market's in alignment on multiple time frames. Money is flowing in the right direction. The 15 is setting up in the right direction. Look at the chart. You can set it up on stocks, Forex, or futures. So it's not done yet, but we've already got it in the works. That's a good question. All right, well, listen, thank you so much for participating. I hope to see you on board. I'd love to have you in the room on Monday. And like I said, we do the entire tech setup for you. And you have any tech issues afterwards, we're always here. Sergio's basically lives here. So have a wonderful, wonderful afternoon. If there are any questions, just give us a call. Here's our website. I'll show you our phone number real quickly, and then we'll end. If you get a busy signal, just hang on, because Rory's already on the phone about this. And we're building a new website, but our number is right here. It's 786-713-5276. And I'm going to make a recording of this, and we're going to send it out. So listen, everyone, have a wonderful, wonderful afternoon. And whatever you do, I hope you're, I wish you profits from the markets and a lot of good luck and a lot of health. Take care, everyone, and have a great, great weekend. Bye-bye.